We got the mobile version now. Remember that?
Oh, that's right. It's Finder
Yeah,
Mobile.
yeah.
Yeah. Frank, how many times has that boat gone by?
What boat?
Frank, it's right in front of us, right out in the water.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, good morning. Welcome back to another live stream. Let me get our intro music going. Happy Monday to you. Good to be back in the office. You know, I have this thing on my nose. I'm bleeding right under my nose. Have you ever been shaving and, you try and get right up here? I cut myself this morning accidentally, mind you, and it's still bleeding. So just if I die, then, I died doing what I love. So good morning. Welcome back to the stream. Thanks for being here. Okay, bleeding is slowing, so we're good. I hope you're doing well. We had a lot of stuff that happened over the weekend that we've got to unfortunately discuss. I mentioned that it's not my favorite time in the world to chat markets when everything is so politically driven, because truthfully, it's not always the most fun thing to talk about as a, it's kind of fun when you're at the dinner table or just talking with friends, but man, it is, people get very heated about politics, and I'm not here to really share my opinions, but it's almost if you just even open that conversation, some people just can't handle it. Anyways, let's take a look objectively at what we've seen this morning so far. As the markets open up, we do see stock market moving higher. Here's the S&P 500 up 0.6%. You got the NASDAQ up 1.2, which is real nice for that position that I took on Friday. US 30 is slightly higher, and the Russell is also slightly higher. Notably, we also have gold about flat on the day. Silver's down on the day. Oil is down on the day for sure here. Arguably because, long story short, sorry, I have to write something down when it just came to my attention. So what we see here is oil is down on the day pretty big. Arguably because, or one theory could be that the T-man potentially getting back in office, which increased in probabilities the last several weeks, according to the betting market. If that happens, there's big promises to pump a lot of oil, pump a lot of, extract a lot of natural resources ourselves here in the U.S. If that kind of becomes the theme, more supply means the demand would go down as well. So that is arguably why we see a little bit lower pricing on the oil market here right now. So, I guess one positive is hopefully we see a little bit cheaper gas prices here in the U.S. They shot up here for the last few weeks, but they've been pretty moderate over, the last few years. There was that period during 2020, 2022, drove me crazy when everybody was like, oh, this is, and let me just say something on the political front, because I have to comment on this stuff because it does impact the markets. But it drives me so crazy myself, because I don't really care what your thoughts are on T-man or B-man, right? Biden or Trump. But here's the thing. When people are just blatantly disrespectful, I really wish that there was just more common ground where we just say, hey, you know what? Let's not disrespect this president or this president. Let's just kind of speak respectfully to each one, since the goal here is to make the U.S. better. You may differ on your opinions, but it's not like either one of them is just trying to do a terrible job. So Regardless, oil prices going up during 2022 was largely because of the invasion of Ukraine. That was not something that was in the control of the White House and the Fed. None of them could control oil prices during that time because there was an invasion which caused a huge surge in demand and more so a lack in supply. So we saw this huge price in oil go up. We've seen a dramatic progress on, gas prices have come down a lot since then, simply because, we've seen, a lot of U.S. Production increases to kind of offset that. And we've seen things de-escalate in a lot of other ways. So yeah. Anyways, you died doing something you like. Well, hey, it wouldn't be the worst way to go, I suppose. Anyways, so oil prices are down here. This is also good for the inflation story because remember that when you have oil prices going lower, all the transportation and costs of goods and services, there's an effect there where lower energy prices getting you your box of cereal. Also, guys, I had a box of cereal this weekend, and the reason I know it's not groundbreaking news, but I don't buy sugary cereals because they're awful for you, and I love them way too much to control myself. But this weekend, I went to the store, and I was bad. I bought a box of cereal. Anybody want to guess what cereal I got? First person to guess it gets 74 brownie points. Anyways, I ate the whole box of cereal this weekend. It was horrible, but it was amazing, but it was not good for me. He's relapsed. Oh, this is a close one. That was a close one. Cinnamon Toast Crunch is insane. I saw that box. I really almost went for that one, but I chose my all-time favorite. I feel like it's not a common all-time favorite, but the one that I chose, Cheerios, no. Fruit Loops, no. Frosted Flakes, nope. Lucky Charms are pretty dang good. Cocoa Pops, those are good. Frosted Flakes. Wow, this tells me that my selection was like maybe not the most popular one. The one that I got was Reese's Puff cereal. That one I don't know what it is. I don't know what it is. I just love that cereal too much. I cannot have that stuff in my house. I eat all of it in sight. I'm a raging monster when it comes to those things. Anyways, let's take a look at some markets here. Gold, I am long gold. I liked this pullback to this support level. Price came down to this level here. I'm liking this for longs. I am already in a long position. If we break this level, I need to get out of the trade. But this one's on my watch list here. So let's take a look at the watch list here for a second. We'll take a look at the S&P in just a moment. I actually am long indices, but not the S&P 500. I'm long the NASDAQ. So we'll talk about that in just a moment. Anyways, here's a current list of things that I'm watching. So let's actually just take out the neutral readings for a second. Keep this simple. May need to reload the Edge Finder. Hold on. So gold was one of the top setups for me. So here we go. We've excluded the neutrals, and what we can see here is just the readings that are on the Edge Finder giving us some sort of strong signal. So if we go down the list, Euro CAD, I don't really trade that one. Aussie, I usually only trade dollar crosses if I'm going to trade FX. Dollar CAD. Actually, let's filter this further. So if you're somebody who uses the Edge Finder, you can use these tabs. They're very useful. Just select what you do or don't want to trade. So if I take out minor currency pairs, my watch list today is 1, 2, 3, 4, 5, 6, 7 things. That is the only 7 things that I could potentially trade today are these 7 charts. So the Dow Jones, the 10-year Treasury bonds, USD CAD, NASDAQ, gold, Russell, and the euro against the dollar. So let's take a look at each one of these. Let's take a look at the Dow Jones. So if I take a look at the Dow, I do like this on a pullback to this level. I'm watching this, as I imagine a lot of people are. This is a very obvious level of support. So if we do see price pullback, I like the idea of buying it right around the 40,000 mark. So I like the Dow, the US 30 for potential upside on this one. In fact, I think if we draw from a fib low to swing high, that's like a somewhere around the 50% level. Yeah, look at that. So I like that level a lot for a possible setup if we get it. But completely honestly, I hope we don't see a pullback there. Now I know if you're somebody who wants that pullback, then you're hoping for that pullback. But I'm already long on the Nasdaq, so I want to see markets just rip, which they have started to today. We'll get to the Nasdaq in just a moment. The next one is the U.S. 10-year Treasury bonds, and what I personally trade for this one is TLT. So if we take a look at TLT here, this is a position that I'm currently in. I've been in this trade off and on I've been on this position for some time. It's gone well, it's gone poorly. It's more of a position trade. I don't have a stop loss or a take profit on this trade. It is just I'm kind of holding it right now because I think that interest rate cuts are likely coming. And if that is going to be the case, then I want some exposure to TLT, which holds long duration treasury bonds. Remember that bonds look more attractive when interest rates are falling, and they look less attractive when interest rates are rising. So yeah, we see the TLT position here going decently well, but if you've watched for a minute, this thing's been up like 2,500. It's been like down. It's been up. It's been flat. This thing has been all over the place. And this one's not one I'm trying to really time per se. I'm just trying to, I guess you could say I'm trying to time it by like a month to month standard. I'm looking to hold this thing for some time. Anyways, let's keep pushing on. Let's take a look at other ones. USD CAD is another watch list for us, watch list item for us. Let's take a look at dollar CAD. Take a look at the daily chart. This is what I see on this one. Keeping it really simple here. If we can break resistance here, the dollar may take a little bit more of a upside turn here. If we can get a break above that, that could be interesting. So breaks and retests might be interesting on dollar CAD. Let's talk about the big one, the NASDAQ. So I am long the NASDAQ. This is my current biggest position. So if we take a look at the NAS on a daily chart level, we came down and tapped into this support zone here. And I've got a stop loss below it. So if we break this area, then I will be out of the trade. And if we go down to this next level, I'll probably try again. So I have my levels marked up on the NASDAQ, but I am definitely bullish overall. And with the news this weekend, I made a video on Sunday about this, but here's the thing. Regardless of whether or not you like Donald Trump, even if you really dislike Donald Trump, and this is not my opinion, this is kind of the market's theory, is that if Donald Trump gets reelected, there is some upside, I think, and a lot of people would think, for stocks. I'm not necessarily saying the economy, and please know the difference here. The stock market is not a perfect reflection of the economy. But one of the simple concepts that I discussed yesterday is that if Donald Trump gets reelected, he has a lot of plans for tax cuts, which definitely help out businesses in America. And, again, leaving opinions or how you feel about the guy out of the picture, tax cuts, if they're more likely because now a Trump victory is more likely, whether you like that or not, being a trader is about being objective. You might just say, look, okay, the probabilities for Trump went up. Regardless of how we feel about it, those tax cuts are likely going to be, they're going to make big companies richer. Now, again, opinions are different than what we're just looking at, because you could say, well, do companies need to get richer? Maybe, maybe not. Is that actually going to help, the middle class? Maybe, maybe not. That's not what we're talking about here. If we're talking about markets, tax cuts for the corporate America, the big companies, the theory is that tax cuts mean they'll have more money in their pockets to rehire more people and to invest more in innovation. That's the upside. The critics of this policy would say that, it's not going to trickle down. It's not going to equate to more hiring. It's just going to turn into stock buybacks, which, if you don't know what that means, it's when companies buy their own shares back with the money they have sitting on their balance sheet. Does that help the middle class? That's the debatable spot. And my point with sharing that is that regardless of how you feel, whether it goes to the middle class or not, this concept, it helps the stock, right? Because if they just do stock buybacks, that's bullish. And if those companies just have extra money and they use it to innovate more, that's also bullish. So stocks are up this morning, and I think that they have room to continue to push up. This is a bull market after all. And until that changes, I am bullish on the stock market. It's also giving us nice readings on the Edge Finder. We see, inflation has been cooling regardless of the whole politics front. We still have economic data, which is arguably more important than who is the president. Actually, I would say definitely more important than who is the president, because these readings are going to give us, a lot of insight into what things are looking like seasonally. Let's take a look at seasonality for just a moment. So if I go the month of year seasonality, let's take a look. If this will load here. The problem with Trump's policies is they're inflationary, not what JP or the markets wants. And that's the big critic, I guess, criticism of the tariffs idea, is that it could cause a lot of inflation. And I have to say that that's a valid concern, because if you raise the price of imported goods, we'll have less imports coming in, and all the existing supply in the United States would become higher priced because of the high demand, less supply, right? So there is some inflationary stuff in there. That being said, where it's debatable and where economists are all over the place on this is whether or not, tax cuts could also incentivize local businesses, domestic businesses, to produce that lack of supplied goods that we may kind of challenge with the import taxes. We'll see. Again, I'm not an economist, and I'm certainly not a professional on government stuff and policies. But from a market's perspective, I think inflation is a valid concern, but also at the same time, I do think that's probably good for the stock market, at least for now, because it's going to cut, how much companies are spending on taxes and keep it more in their pockets, which makes them more richly valued. So again, I'm not advocating for whether or not that's right or wrong. I'm just telling you what I think will happen in the markets. So, let's take a look at seasonal stuff here for a second. We're on gold. We'll get to gold in just a second. Let's go back to this concept on the NAS. And I want to talk a little bit about the month of July, which has, hold on, let me find it. Where's the NASDAQ? Okay, I'm just going to search. We need to sort this. This needs to be sorted by alphabetical. Hold on, I'm going to write that down. Okay. We're going to make this so that when you pull it up, it sorts by alphabetical. Anyways, so July has been a little bit disappointing for seasonality, but July is not over. So here's the thing. If you take a look at seasonally, July, as we came into this month, was supposed to be, at least on a last 10-year historical average perspective, the most bullish year for the bullish month for the NASDAQ. So we're expecting a big up move in July, but we have not seen that. In fact, July has been negative for the NASDAQ overall, especially in recent days. That being said, it's only July 22nd, so we have some time here before the end. So we could see a swing back in seasonality, but seasonally, it is a bullish time for the stock market. Now, that changes a little bit once you get into September and October, but right now, I would say overall party is still on until something changes. If the NASDAQ sells off today, if we're completely wrong about this, I have a stop loss on my trade for a very specific reason. If this bull market starts to crack, I'm not going to stick around and wait for it. I'm going to trade it. So what I mean by that is that if this market can't hold support, I think it will, but if it doesn't, I need to stop out, take a controlled loss, and wait for a better chance. Now, for me, a pullback in the S&P 500 and the NASDAQ is perfectly fine as long as we don't cross over 10% pullback. So what that means is that I am bullish on this market pretty much all the way down at these levels, unless you see a break of the 10% level. Because at 10%, now we may see more of a push down to like 15 to 20. But everything above there, I think pullbacks are opportunities to buy. I don't think that, it's not even just about Donald Trump. In fact, I think that the bigger picture is not about Donald Trump at all. I think that we see inflation cooling. I think that we see, the labor market is slowing, but not, terribly weak. We see the consumer definitely a bit on the weaker side, but we still see massive spending on innovation in the AI front. Again, forget who's going to be president for a second. This market has feet to stand on, in my opinion. So as it pulls back, I am a buyer, right? I am looking for opportunities to get long the NAS. I've been long stocks pretty much all year, and it's been a really, really strong year for the stock market. I'm also bullish on gold, so we'll get to gold next. I know a lot of people are probably wondering about that. Also, just a quick pause as I keep going with this stuff. If you guys would like to try out the Edge Finder for 30 days, here's some information for you. We're going to drop a link here in the chat as we're speaking here. You can get 30 days access with the Edge Finder by clicking the link and applying using the application right here. If you want to try out the Edge Finder, if this is something that you would like to use, if you've watched my streams, you know that each day, this is what I'm using every single day to find setups. What I trade is primarily based on the Edge Finder first, and then I draw pretty charts on the technicals second. But really, the economic data is the primary thing that I'm looking for in my trading. And fundamental data is not only hard to find, it's hard to find all in one spot. And arguably even more important, it's hard to find fundamental data broken down and scored simply for the average trader to understand. So if you're looking to get more into fundamentals and you'd like to try out the tool, get 30 days with this link. You can fill out that application and someone from our team will send you information on it. So anyways, yeah, so NASDAQ is up 1.3% on the day. That is an aggressive bounce considering last week we had a pretty big sell-off. We'll see if that has, if that can continue. I think in the short run, we'll see if it can break through these levels. And again, looking like a strong start this week for the NAS, but it's early and we have a lot of stuff coming this week down the pipeline as well. We'll talk on that later. Let's get to gold here. So gold, I'm also looking for longs on this one. I am already in a long position on gold. I took a position on Friday. We're slightly in the red here. So, whoops. So went long on gold as we pulled back, got in on this pullback here. And my stop loss is around the 2370 level. So if we break the 2400 level and we can't come back from it, then I will take a loss on this one and move on from it. So I like gold to the upside. Couple reasons here. We'll stick mostly to the economic data for a second. So PMIs have been a big one for me on gold. We've seen the Purchasing Managers Index, both on the services and the manufacturing front in the US, showing signs of slowing in the economy. And we can show that data here. Let me give you a little bit more picture. Now, remember that generally speaking, slowdown in the economy is a positive thing for gold as people might look to get out of traditional assets, maybe, whether it be stocks or bonds or whatever. They may be a little concerned about the state of the economy and they want to maybe buy an alternative investment like gold, which is a big theme in the central banking world, where a lot of central banks have been buying gold aggressively, offloading their dollars in exchange for gold, which again drives the price higher on gold. That's been a theme this year for sure, especially the Chinese central bank buying a lot of physical gold. So PMIs here, this is the services PMI number. And what we can see here is that above 50 is considered growth in the economy is expected, whereas a number below is a decline expected in the economy. And we can see that last time around, the red dot showed that the market was expecting a positive growth forecast for the services PMI data. And so what we actually got was on July 3rd, we got a reading of 48.8. So it came out light. And this is a little bit, actually, there was a huge move on this day. Gold really jumped on this day because, again, expectations for cooling in the economy are going to give you a little bit of concern on that front. And it led to some buying of gold, also some weakness in the dollar, right? That's kind of, they go hand in hand. Manufacturing PMI, let's take a look at this, has been below the 50 level for some time here. In fact, it briefly crossed above 50, but we've stayed in kind of a slow period for manufacturing growth for some time. So again, weakness in the dollar from this, and that also is bullish for gold. So it's reflecting in our top setups algorithm here. You can see positive pointage for gold. I don't think that's a word, pointage, but anyways, gold is getting a bullish reading overall. I liked the pullback on Friday, so I went long, stops below, and we'll see how that one goes. But if I stop out of it, then I'll similar to the Nasdaq, I'm gold is something I'm bullish on overall this year. I probably won't be shorting gold unless something drastic changes. Perhaps if we see interest rates expected to go up, if inflation kicks up, if the economy, rips higher and we need to, raise rates again, that's a different story. But I don't think that is happening this year. And I think that that's pretty far fetched. So for the most part, I'm going to stay on the bullish side of gold, thinking that rates could come down, which is the primary driver of gold that I see is interest rates. And I think interest rates are going down. So that's my opinion. I could be right about that. I could be wrong about that, but I like gold to the upside for that reason. So let's pause here and I'll just remind you again, if you would like to try out the Edge Finder, which is what I'm using to break down economic data, you can use the link that we just dropped moments ago. We'll drop it one more time to apply for a 30-day trial to get access to the Edge Finder. We'll send you information after you apply for that there. Biden stepping down, what does that mean for markets? If you'd like a full breakdown on that, I did a video last night. I jumped out of bed and I said, for the people, we're going to do a breakdown on what this means. So exactly that question, I did a video on that. So you can just find it on my channel. So is gold price going to go up to 2430? I wish I could tell you for sure. I would love it to, but I don't know if that is going to happen or not. I think probabilities wise, I think it will. Certainly not, or certainties wise, there are no certainties, right? Gold could drop off the face of the earth if something changes. Nobody knows with certain what's going to happen in the markets, and that's foolish to think otherwise. So when you see me taking a position here, if I was 100% certain, I wouldn't have stop losses. I would just go full margin right here, but I'm not going to do that because I know nobody can be certain about markets and things can change. So let's finish the watch list here. If we take a look at the Russell for a moment, this is another one that I'm really interested in. Actually really interested in, especially, and again, I have to keep coming back to this concept, but I'm really not thrilled to do so. If Donald Trump wins, the tariff situation is interesting. Frank actually just stepped in my office before we went live streaming, and we discussed this. The tariffs favor domestic companies in the US. So what does that mean? Well, tariffs on companies, that export largely, like huge companies in the US, they're going to probably be met with reciprocal tariffs from other places, which may make American goods more expensive in other places. And if the dollar gets strong, they could also become more expensive. That being said, tariffs on imports make imports more expensive. So let's say this is USA, right? There's Florida, there's Maine, beautiful state, by the way. California goes like this, Texas goes like this. There's the US. Beautiful, right? I think that's pretty spot on. The East Coast just expanded way out into the ocean. Anyways, this is the US and goods are coming into the US, right? Goods are coming into the US here, probably a lot more over here. And then there's Chinese goods that go through the Panama Canal and then they go to Florida. Anyways, you have all these imports, right? If there's businesses, let's just say that we apply a 10% tariff to all these imports, right? If all of these things have import costs added on to them, then suddenly domestic companies in the US, right? Let's say, I know these are houses, but let's pretend they're businesses. Suddenly they actually look more attractive because now domestic manufacturing and companies that can provide those services or products in the country might get a boost in revenue because now they're more competitive with these imports because the cost is going up. So my point with sharing that is the Russell is a lot of domestic companies. The Russell is not as international as, say, the SP500 or the Nasdaq is. So I actually really like the Russell in the situation that we do see Trump being elected. Does that make sense? Again, I have to be so careful when I talk about these topics because I know a lot of people don't like Trump. A lot of people don't like Biden. A lot of people don't like Kamala Harris. I get it. Everybody's so up in arms about, so-and-so. But I'm trying to navigate this topic carefully because it is very important to financial markets. And that is my job here. I am not the professional on government policies or fiscal spending. I am not the professional, but I'm trying to do my best here to gauge what it's going to do specific to the markets that I trade. You guys don't watch me for politics. You watch me for, and I'm not here to share my opinions. I'm here to share, or not my political opinions. My opinions here on the markets is what you're here for, which is absolutely what I'm trying to provide. So thank you for those of you who are being patient with me. And I know we'll get through this politics stuff together. Anyways, I like the Russell for that reason. So if you get a pullback, could be interesting. I like that setup. Right now, the Nasdaq's just ripping here, which is fantastic. S&P also, I was looking for a little bit deeper on S&P 500. Didn't quite get there, but I primarily like the Nasdaq anyways for the big tech story, which are these the most expensive stocks? Yes, but I would argue for a good reason. They're the ones that have the most earnings growth and have a lot of upside in most scenarios. If interest rates stay where they're at, I kind of like the Nasdaq. If interest rates start to go down, I really like the Nasdaq. If interest rates go up, then we run away from the Nasdaq. But that's not the expected kind of scenario right now. Anyways, guys, we're going to be now bringing on our guest of the day. We've got Ivan, who's going to be joining us here in just a moment. So stick around. I did also want to mention that we are going to be sharing a ton of stuff here this week inside of our Telegram channel. If you guys aren't in the Telegram channel, Chandler or James, if you guys wouldn't mind dropping the link for us, we're going to be sharing a ton of good stuff in there in terms of markets. So if you want to continue watching the show without turning on YouTube, or if you're on the go, a great way to keep up with our ideas is in the Telegram channel. The link is right here. We just dropped it there for you. Make sure to join that. If you have a Telegram, we'd love to have you in there hanging out with us. It's really a pretty quality little Telegram channel that Frank and I run. So come join us. Anyways, stay tuned. We'll be right back with Ivan just after this. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, we're back with Ivan. Hey, Ivan, how are you? Happy Monday.
Happy Monday.
How are you, sir? And what are you watching in the markets?
I'm watching you. I went to the YouTube channel. I'm like,
and how's it going?
What did you do? Did you buy NASDAQ?
I did. I bought the NASDAQ. I went all in on your account too. I actually logged into your account when you were sleeping, and I bought the NASDAQ all in. So I hope you don't mind.
That's great.
Anyways, I bought the NASDAQ.
You did, yeah.
So we'll see what happens, but kind of a big move up here today after a big slide last week. So we'll see if it can continue to the upside or not. I saw a little bit of your Sunday video here, Ivan. I watched some of it last night, and I'm curious your thoughts on some things here. In terms of the dollar, I think you mentioned like maybe we see some short-term bullishness for the dollar, and is that right?
Yeah.
Can you break that down for us again?
First of all, I didn't know that you did account management, but there we are. The reason
just to get that out there, I don't manage anybody's money.
the reason is was at least in my head would be higher chance of Trump being the winner chicken dinner. And he is pro stimulus, which is probably going to keep inflation going higher. So this political risk that he carries naturally, like a natural aura of him. So that's kind of the reason. And then technically, we went below 104, back above 104. So we have done a trend of set 200 pips or something, and then that's kind of a normal move for me. And then I'm expecting kind of a range during the summer. Is 200 pips down, 250 pips down. Sorry, is good enough for starting expecting a pullback or return back up.
Yeah.
That's
Yeah,
my
I mean,
three.
so I was going to say the interesting thing about the dollar is that we've had a really big move lower without much of a pullback in terms of a bullish move. You had these tiny little bullish swings, but on my video as well on Sunday, I think for me, I'm fine with a pullback in the dollar, still being overall bearish, but thinking that we could see a pullback up into like this 105 level. The way we kind of false break out there below could lead to a little bit more of a push up into this zone here. My theory though is that still we overall see the dollar lower this year. One of the themes also of Trump's policies is actually a bit of a weaker dollar to make exports more competitive. That being said, the market is like, those tariffs could be very inflationary. So that would drive, the Fed to maybe need to keep interest rates higher for longer. So maybe the dollar goes up. So I'm kind of conflicted on the dollar. It's a little bit tricky for me, but regardless of the president, I think the economic data, I don't want to lose sight of what really is important here overall, which is, do we continue to see inflation coming down in a trending way? And do we see jobs data stay, lax, not awful, not too hot, but somewhere kind of soft? Do you agree, or is it really all about the president trade right now?
You brought something up that was very interesting. Why would America bring down the dollar to increase exports? Well, it kind of makes sense, but it doesn't, because 75% of the GDP is domestic. Like, they are self-sufficient. And of course, it's probably a bit better if they can get like lower, cheaper products from China instead of buying it at 10x by US manufacturers. Okay, maybe. Or you can get lower car prices because of its lower manufacturing from Mexico. Maybe. But I'm like, why also I don't know. It's kind of like, I'm just trying to find an analogy here. It's kind of like trying to build a bridge over the water instead of just take away the water, like just drain the pond or something. I don't know. Like, it feels like, you're trying. Yeah, I mean, it's the wrong use of money. Sorry.
No, I mean, I see what you're saying. It's a weird one, but it's a unique strategy that it does seem
It
like
will make sense for Canada, Australia, Euro, China, New Zealand. I am
that's fair,
like, if you are
because they're more
commodity, yes.
exporter-based economies, right?
Yeah.
Is that what you're saying? Okay, yeah.
Yeah.
Maybe the concept, maybe the theory at least is raise, manufacturing in the U.S. as well as exports in the U.S. We do have a pretty terrible trade deficit overall in the U.S., so maybe that's something that's the theme. I'm not sure. I'm not. Again, I'm not in government, so I'm not calling the shots by any means. But in terms of the markets, I think you made a good point about the tariffs are rightly so a concern on the inflation front, because anytime you mess around, we saw Ivan in 2022 how supply getting messed up can be so inflationary. Remember in 2022, I was talking about this shortly before you joined the stream. Here's oil prices, and oil prices. I know this is a different catalyst, but we saw oil prices rising dramatically, and then really rising dramatically during the Ukraine and Russian kind of outbreak, where supply got hurt. When you introduce tariffs, the one concern that I have, and many market participants have, is that is another supply disruption to a degree that could be very inflationary, and we've seen how painful inflation can be. Now, I'm not saying that it's right or wrong. I'm just saying it's fair for the market to at least be like, how is this going to work out, or is this going to be bad? So, with an increased likelihood that Trump is the president next, I think the market is right to be a little concerned about that. That being said, also, Ivan, while we're on the subject of oil, the administration that Trump wants to run is probably going to pump a lot of oil, just like Biden has pumped a lot of oil. So oil prices are down today.
Yeah. Also, one other thing though that you can add to this is when you increase tariffs, you are hurting someone's business, either on your side or on the other side. So that is a risk off. Remember, Trump went to trade war with China.
Yes.
I can't remember the exact outcome of it, but it wasn't necessarily positive for everyone.
No,
Domestically and
2018 was a pretty rough trading year. I'm just pulling it up while
It
you're
was.
talking about it, just for reference. Here's 2018. We saw this was the major concerns around the trade war that Trump had going on with China at the time. So
So it significantly increased the dollar, significantly increased the risk of environment that we're in. So that's what that's one of the points when I say there's a risk premium to Trump's aura, no matter if you like him or not. To the markets, he represents a bit of instability for the greater good of American people or American economy. But for everything else of status quo, it is a change. So you have the trade wars, you have the tweets, you have the meeting with Kim Jong Un. Is that what this guy called nowadays? The North Korean guy.
Yep.
Try to bring peace at least. So, and then he said he wants to pull out of NATO. Okay, and he said that later on as well, like lately. So. Risk off is kind of the game and the name of him, to be honest.
Another thing too, Ivan, to think about with the oil price specifically is the fall in oil prices could also be that the campaign that they're running is very focused on ending wars, right? So if wars end, could that be a bearish thing for gold and oil? And again, I'm not. Everybody wants wars to end. I'm not saying that that's like specific to one side or the other, but the fashion in which they try to end it is differently. And I think, at least in the campaign process, Trump's been pretty aggressive on wanting to end things between Ukraine and Russia and all that stuff. So if wars end, the concern, the risk premium that's in oil and in gold could see some downside. Now, I still think gold is bullish on a different front, but at least on oil, maybe that's another component to why oil's down today.
Yeah, I also think there is a larger component to it. If you want to do oil by itself, sorry, I'm on the wrong chart here. The stimulus that China has imposed has not proven to be good enough. So the economy is not doing the greatest. You have falling inflation across all G7, 8, 9, 10 countries, which is definitely going to harm demand. So for oil to be lower today is kind of, in my view, a more realization or kind of reality check for the market, because as far as I know, that we still have rate supply cuts from Saudi Arabia at around 500 million barrels per day or something in that direction. So it makes a lot of sense. What didn't make sense, what was the rise from 72 to 9 to 84. That one I couldn't explain, but I can explain the fall.
Yeah, it's interesting stuff. I mean, stock market up today, except for the Russell, which is down. Perhaps this is a bit of a, well, I would have thought that if inflation concerns were really ramping up, you would have seen yields going up today, but we don't really see yields going up. The dollar's not up, very much today. So, kind of an interesting day. You also see the VIX down 4%. And I think that, whether it was regardless of who, what, not because it's Trump, but because the market now thinks that there's like a really solid chance of a specific person winning the election, and they have that question kind of more answered. That might be why volatility is down here today, whether it was Biden or Trump or whatever. Like if the market just has someone that they can say like, okay, this is kind of who we're going to be dealing with. If they know that rather than being unknown, kind of is another bullish thing. Like it was almost like when Biden became the president and it's like, okay, the election is behind us. The markets went up because now they're like, okay, we know what we're dealing with now. There's not that uncertainty of who's going to be the president. So I do think that, VIX futures have actually been forecasting for the VIX to remain elevated for a lot of the rest of the year as we determine who the next president is going to be. Because there's a lot of, as you mentioned earlier, there's a lot of uncertainty in regime shift or whether or not it's going to stay the same or not. So it's hard to avoid the the topic because it is so pressing to the markets. But I do keep coming back to kind of the overall bigger picture, which I still think is very largely dependent on the economic data. We do have some stuff coming up here pretty soon, Ivan, in terms of economic data, right? Do you know off the top of your head what's coming?
Which country?
Primarily US, just because we're talking election stuff.
PCE on Friday.
Yep, that's right. PCE.
GDP on Thursday.
Yep, this actually could be pretty market moving. Advanced GDP is always the big one of the three GDP types. We've got the week after that, I think, is a big one. Yeah, we have Fed funds rate, the Fed meeting on next Wednesday. And we have the big one for August, or one of the big ones for August, which is the NFP event, August 2nd. So a lot of economic data still coming in. And, just while we're on the topic here, we have something else that is really more important, I think, than anything else if you're someone who's watching the indices. And that is earnings this week start to really kick up. On Tuesday, we have Google, Tesla, and Visa, and Coca-Cola, which I like myself, Coca-Cola, so I'll be watching that one. But you have a lot of big companies starting to report their earnings too, and this is really, really important as well to at least the stock market side. Would you agree?
Yeah. Does Buffett own shares in Visa?
I think he does. Actually, I don't know if he does or not. I think he does.
He does in
Buffett.
Coca-Cola, he knows he has been a long-time investor there, but because in that kind of environment of you just have what do you call it? You have stocks that just will grow forever or keep giving returns. Those solid legacy companies that just goes and goes and goes. Same thing. So for Visa would also be in that category, but I don't know about their fundamentals. But generally speaking,
yeah. So I see it being a pretty big week on the earnings front. You've got Google. Let's see what else. Do we have anything else big this week? I think we kind of kick it off light with just Tuesday being the really big day with Google and Tesla. Both of those pretty important market sentiment drivers. And this is the thing about this market is if you're somebody who's watching the S&P 500, it is either going to look very expensive or very well priced by the end of earnings season. That's the thing is, if the earnings match the price tag, then it's okay. But if the earnings don't, that's where you get into murky waters. So we'll see on that front. Ivan, what else are you watching? Do you have any other setups or ideas?
I'm watching chat. I just wanna mention two things. China is important for Australia because China is buying iron ore or products from Australia, so it's their biggest buyer. So when China does bad, Australia does bad. And is Australian dollar moving lower because of China decreasing their interest rate by 25%? I don't know if they have, and if they have, then yeah, that would not necessarily be great for Australian dollar, as well as Australian dollar was at least very bullish at some point, but now it's very, very, very bearish, and I've not been able to trade it. But it's a good technical turnaround, but I'm opposite, so I'm just waiting for this one to fall, and then it can go back up again. Am I looking at any trades? I like Swiss pairs going lower, but those Swiss pairs that is lower is very lower, and then dollar Swiss. I said yesterday I want to look at it. I'm still wanting to look at it. I just don't have the confidence at the moment. Like what is this? It's supposed to do that and then that, not range. So that is one, and then the other ones are the New Zealand's. I really want them to have deep pullbacks. Isn't happening, mate.
Yeah, the Kiwi has been really, really weak recently,
Yes.
even against the dollar here. It's been just selling off heavily, and yeah, that's been a tough one to try and catch pullbacks on recently. So I thought you did have a position on it. Did you not have a position
I
on it?
closed to take profit
Okay.
weekly.
Nice.
It's in the Discord. But yeah, I closed out at 80.89, I think, maybe somewhere in that
Very
direction.
nice. Very nice.
Are you
Anything
still
else
in
that
it? But you stayed in it, didn't you?
I'm still in dollar Swiss. Yes, I'm in.
Yeah.
I have. I've been looking for, similar to you with this one, if I can get a break lower through that previous low, I'd be
Mhm.
happy to trail stops and put in kind of a further locked in profit. If we could show my screen for just a second, I'll show you. So if we can see, move like this, if we see a break and take out the lows, that would be a bit more confident that that'd be a nice lower high in which I could trail my stop. So if it doesn't, though, I run the risk here, and I fully accept that this could happen, that we could see a reversal off this level, and then I would be taken out for a very small profit. But I like the overall downtrend on the dollar, so I'm willing to kind of stay loose on this, and I would just like to see, if we can, a break through the lows. That would be my signal to trail stops further. So we'll see.
Mm. Yeah. Okay. I'm a bit, I I want it to. I'm just around church, but I want it to break again now, since it's not. Oops, that was not the one that I was supposed to do. But it needs to break that low there, and then I can look for another one. Because currently, it looks that direction at the moment. So, yeah.
Yeah, I'd like to see that this little bullish move kind of fizzle out and roll over. If it doesn't, then I
Yeah.
might get taken out of the trade, which would be fine. And it is what
But
it
okay.
is. But we'll see.
We'll survive. We'll
Yeah.
survive.
Well, I guess, Ivan, I want to just mention also that you've been doing some coaching calls recently. You've been doing some good stuff in the Discord group. You've also been doing webinars. Are you offering any more? What offers does Ivan currently have?
Oh, I got burned with the free calls last week. So
Yeah.
those are no longer. But you can still talk to me. I'll still, if you DM me on Discord, I'll still give you a free hour. But yeah.
There you go, guys.
And
If you want to do some coaching with Ivan, that is available in our Discord channel. It's also, you can find him on his socials here. His YouTube channel, Ivan FXW. You can find him there. Follow him, subscribe to him there. You can reach out to him. He does coaching calls, and as you just mentioned, if you send him a message and you're genuine about it, you're really looking for some coaching, you can contact him, and he'll give you some information and maybe even do a free kind of beginner call for you. So take advantage, reach out to Ivan. Ivan, thank you very much for coming on the show today, man. And we'll see you back a little bit later.
Thank you very much for having me.
All right. See you, man. All right, guys. Always good to have Ivan on. Again, he knows his fundamental stuff, and definitely go-to guy for a lot of fundamentals. So if you're looking to learn, he did some coaching calls last week, as he was mentioning. Not a lot of people took it very seriously. That is the thing about free stuff. A lot of times people don't take free stuff seriously. But if you are listening to this, you enjoyed Ivan's commentary, and you would like to learn from him, really go message him and take it seriously. He's a great guy to do coaching with, so take advantage of it. Anyways, guys, we got the Dow Jones flat on the day. The Russell's lower today. You've got the S&P 500 moving up a little bit. NASDAQ's up as well. And interesting day across the board. Got the dollar index slightly higher here. Bitcoin's lower here today as well. Speaking of Bitcoin, if this one does give me a pullback, I'd be interested in this, but I don't know if we're going to get it or not. I like Bitcoin on the long side, but I do not currently have a position. So I am waiting and watching on that. Last one I didn't get to on my watch list was Euro USD. So let's do that really quick. Euro dollar. I kind of liked this setup, what it was starting to form here, but this breakout did not hold very well. So I'd like to see something like this: break, retest, continuation. I like the euro to the upside, but going to need to see like price action follow through on this level. Because otherwise, I feel like you're just bumping heads against the ceiling right now. So we'll see. Anyways, guys, what we're going to do here is we're going to take a quick break, and then Chris Pulver's going to take over the show for a little bit. And then you guys will be joined by him and Frank at some point as well. So stay tuned. We'll be having Chris Pulver take over the show in just a moment. We'll be right back just after this. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hey everybody, happy Monday. Welcome back. This is Chris Pulver here. Let's take some requests. Let's go through some charts. I am just getting some covered calls added into some assignments that I had last week. I'm trying to resolve a little trade in Netflix. I was assigned early on some credit spreads with an earnings play. We can talk about that. I put in pending orders in my live session on my YouTube channel. And the actual value of my put side is not paying the way that it should. And I'm not going to take the loss. I'm going to essentially I'm going to accept the $1.25 loss that I should have had in the initial credit spread, but not make it unfavorable. So I'm watching that price closely. I'm going to see if prices settle in, and I have to resolve this because I took 2 contracts on Netflix assigned as $720. So 720 times 200, that's 144K in assignment. I obviously don't want to take that in Netflix. I don't care how good the stock is. I'm not buying it for $100,000. So anyway, I have the positions in. I'm watching. I then took some assignment in KWeb. We're trading here at $27.45. I have a $26 covered call. My cost base has been lowered all the way down to $24.69. So let me add this into my chart really quickly. So 726 expiration, $26 covered call, and the break even is 24.69. So I can repair this trade for about $1.31 net profit as long as price this week stays above $26. And then JD, which is a retail play for China, we're trading at 26.78. I took some shares of this one as well with a break even of around 26.96. So this one I've got to 26.96. I can take $1 off of it. Let me see what this will give me. So a couple of accounts. I've got 100 shares assigned. I was assigned at $28 for $1.02 credit, which gives me a break even of around 26.98. 26.98. If I lower the cost basis by another $1, so let me see if I can get a covered call in here. So if I do the $26 call, the 26.50 call, I'm going to try to get this called away for 26.50. That will lower me. Do the math here. So 100 shares at 28. Let me do some number crunching really quickly. So 28 minus $1.02, break even at 26.98. If I add in a covered call for 26.50 for 65 cents, 26.33, get it called away at 26.50, turn it to essentially a break even. That's a possibility. That should be okay. I'm going to try to go a little bit deeper than that. So 26.98. If I collect 98 cents on the 26, that's going to make it a break even trade. I'm going to try to keep it at, let's see if we can. 27 means I'm probably going to hang on to it a little bit longer, which I don't necessarily want to do, but 27 is the easier repair of the two. All right, just crunch some numbers here. So 100 shares at 26.98. I'm going to put in a 27 call. That way I lower my cost basis down to 26.50 or so. So I'll add this in for 41 cents. I have 100 shares. So 41 cents add in. There we go. I have the 100 shares. I want to cover it. Oh, they're going to freaking tie me up with this Netflix garbage. All right, let me get this margin account. JD, 300 shares. All right, this one's easy. The July 26, $26. Okay. July 26. Filled. And do the same thing here. Okay, 9151. Okay, so resolved on JD. I need a couple more trades there. All right. So I need to revisit JD. I need to fix this Netflix situation. So if you're wondering what's going on here, this is what I'm doing. So Netflix, I took a credit spread, and on that bull put spread, it was a 720 by 715. It was assigned at 720. So here's how the numbers work. So the broker assigns me at 720. Okay. I collected $7.50 on the two credit spreads. So I can take off, or yes, it was assigned to 720 for 750 credit. So that puts my break even around 712.5. Okay, 712.5 would be my break even. Now, that is considering that I still have this trade running. Okay, I still have this trade running. So this one, I collected about $3.75 on a $5 spread, which means my risk is still $1.25. Right? So realistically, if I'm still risking $1.25, I need to try, if I'm going to get break even on this trade, I'm going to try to get this one for another $1.25 on top, which means if I can close this out for like 7.14 or better, that should be okay to take profit on. So if I can get 7.14, I see the mids trading for 7.14 and change. So let's see if I can get that. If I can get 7.14, that should be okay. It popped up and said it was unfavorable based on this. So 720 assignment minus the 750 credit. Take in the extra risk. So as long as I can close for 713.75, that should be break even or better. Now I don't think it's going to let me take a trade at 714. Let's find out. Replace 714. Let me see if I can get like 714.50. So it's unfavorable price. Limit or better than strike. Well, I don't know. I'm better off closing each individual leg. This is kind of silly. So if I take the 715 all by itself, this is what's been a little frustrating. So current price is sorry, this is important stuff. I mean, I had accounts that were signed for $140,000 worth of stock. So if I'm not taking requests on gold and dollar right now, so bear with me. Okay, 720 assignment minus the 750 credit. Okay, or even if I just take the one credit spread. So 716.25. Now I still have a 715 put minus current price is 642.23. I should be able to get $72, and this is what's annoying is I'm not even getting the full value. Like somehow I'm getting shortchanged by about $4 from what my actual put. This is a long put. It should be worth 72.77, and I'm not seeing that. Even with the mid price right now at 71.65, it's not showing me that value. So resolve this today. I don't want this to carry over. I can't let these negative, option and stock buying power positions carry on for the end of the day. So these need to be resolved pretty quickly. So let me see here if I can get 72.77 on just this side. So I'm going to do some canceling here. So let me cancel all these trades I put in earlier that were not filling. I'll just cancel these and start from scratch. Cancel. Cancel. There. Okay, so let's start it over. So I had the shares. I have 2. If I close out my put, now I should be able to get this 715 minus 642.39. I should be able to see this trading for 72.61. I'm going to put in 72.61. Okay, I'm actually going to put in, I guess I'll try for something a little bit better. I'm going to put in $73 and give me a little bit of wiggle room on this stock. So 72.50 should be the current intrinsic value of my option at 642 and change. Okay, let's see if I can get 73. 73 bucks. Not filling. Filled. Okay, so it filled for 73. Now I can close out the shares. Let me go this account, close out the shares, close, and I'll try to get filled at 641.71. Crikey. All right, hang on. I'll move this out of the way. What's current price of Netflix? 641.95. All right, so make sure to do the math on this. So 715 minus 73 puts me at 642. I'm trying to close it at 642. Filled. Okay, so that one's been resolved for basically a wash on the bull put spread. Okay. So we get some buying power back there. No problem. All right. Next account. Try this again. So a 73 credit and a 642 share price. And now I should be able to get more out of the long put because we've dropped about $1.30 from where I closed it. So 715. Yep. All right. So 715 minus 641.44. So I should be able to get $73 to $74 out of the put now. I'm going to try to get 74. Okay, 70, 641.97. This is the potential issue. It's like this, the spread's a little bit wide. The bid ask on Netflix is a little wide. So the price keeps fluctuating. So $73 now. My gosh, this is going to be so annoying. Minus 642.63. So see if I can get 73 bucks for it. Close full 73. Nope. And this one, because this is a, they're gonna make me close them at the same time. All right, let's try and get 715 again. All right, I'm not going to bore you with this. Let's take some requests. Just a frustrating, bid ask is wide. Just trying to get things resolved. Where I'm only taking like $1.25 loss. I still have another trade running for the rest of the week to $600 or lower. If that's the case, I'll still net some profit on this. But watching Netflix, unfortunately, it was a sign, so that's a bit annoying. But it is what it is. All right, where we are at for the week. We had a ridiculous last couple weeks of trading. I mean, if you look back for the last 2 weeks of trading, we've had a lot happen. We had the, assassination attempt on Trump. We had Biden drop out of the race. We had a crazy, ridiculous rotation from mega cap into small cap and a slight hint of a broadening market. This is last week's performance. You look at some of your storied stocks for the week for the year that essentially has carried us through 2023's rally with a little bit of broad market here and there, mostly Mag 7. You're staring at the Mag 7 finally showing some red. So everything down in the Mag 7, a lot more green elsewhere, and we're wondering if this rotation is for real, or if this is just the necessary pullback to kind of weigh in on some pretty solid technicals overall. I mean, I posted a video last week on Twitter. So if you follow me, twitter.com, my handle is @RealChrisPulver, and I posted this video. That was a live session I just did right here. So posted a chart, posted a video. I'm just looking at a potential, 1, 2, 3 correction or an ABC correction on the S&P and the NASDAQ. I'm forecasting about a 7 to 12% pullback on the S&P and a 10 to 15% pullback on the NASDAQ. Now, to get there, let me just switch this chart here. Let's go to the ES feed. It's a little bit cleaner chart. To get there, all I'm looking for is a 3-wave move. So if we have a, let's say this is wave 1, change the color. If this is wave 1, okay, wave 2, wave 3, do we come back to this resistance level here and then start a bounce? Do we get worse and come back and try to retest these April lows? We're going to find out. But the trend line support is pretty simple. Trend line support right there. So even if we fall in, if we fall in a straight line, maybe that's enough, right? We fall in a straight line here. Maybe that's enough to then, dust itself off and try to climb to all-time highs. But the one thing I would say that's going to be really important to watch over the next probably couple of weeks, right? Next couple of weeks, in my opinion, the important thing to watch would be if you want to see a broader market, you're going to have to see the RSP, which is equal weighted S&P, break new highs. So I'm going to set a chart alarm here at 172.68 and all-time highs on the RSP and the QQQE, same type of thing, because we've retreated. So if we go to 92.15 on the QQQE, that's equal weighted. This would be all-time highs. So if we have equal weight making all-time highs, that's a good thing for market breadth. That's a good thing for a majority of the stocks to start getting back above to those buy zones and confirmations versus the, the S&P as a whole, maybe has a bit of a pause or pullback as there's rotation out of those mega cap stocks. Okay. So I have some hedges on ES, some out of the money plays. I'm long the VIX as well. We're trading at 1557 with a bit of a retreat. We're sitting here with, some of the lowest volatility on record. If we have a bit more of a scare this week, does the volatility index climb up into the 20s? If so, I'm looking to take some profit in here. I've got a 1050 call as well as a $20 out of the money call Hopefully those allow me to take a few $1,000s in profit for a bit of a hedge. But where we are from last week's trading, watching this week's low, or I'm sorry, watching to see if we break last week's low or we break last week's high, or if we stay in the middle. Okay, I mean, that's an up, down, sideways. I know that's not helping anybody here. I would expect the pressure to remain on the downside. Okay, the one thing I'm going to be paying attention to is if we break the lows. Okay, if we break the lows for the S&P, I'm looking to see what is the Russell doing. Because if we break lows in the S&P and break lows in the Nasdaq, whether it's NDX or the Qs, if we break last week's lows, I'm looking to see, does the IWM also break last week's low? Okay, because if that's the case, then all of a sudden we have a broader market decline. Now, we've had a big rip to the upside in small cap. We've had a pullback. I'm looking for some stabilization in here. If we go here for a low high push or low high breakout, pull back into a quick fib level, this is probably around that 38%, give or take. Let me zoom out here for a sec. Yeah, let's take a fib from right here. We pulled back about 38%. So there's a pretty good probability that this 38% fib holds. We come back and retest the high. If there's more upside, we can poke up to this 18127 zone. That'd be a Fibonacci extension. If we put some pressure to the downside, what happens around this like 50% to 61% zone? Again, where does the Russell catch bid? That's really what I'm asking is if we're going to see the S&P drop, if we're going to see the Qs drop, is the Russell going to be treated separately? Is it going to be trading separately? Will it be behaving differently? If it is, good. Let's see that rotation continue to go into small cap as the market's anticipating rate cuts from the Fed. But if everything is down and the Russell's up this explosive amount and then back down to where it started, I don't love that look. That's essentially that's like a pump and dump on a friggin' index. That's a lot. So we will see. All right. So I think that's what's going to be important is if the RSP can get some all-time highs for a market broadening. If the QQQE or the equal weighted NASDAQ can get an all-time high and the Russell can stabilize and start to show, a little bit more green or stability compared to its counterparts. The Dow, same type of thing. This was a big breakout to the upside, pulled back aggressively. We're watching last week's low, last week's high. If we go lower, are we also lower on the SPY, lower on the Qs? And then what's the question mark? Are we lower on the Russell? Okay. The one thing that is tricky about these markets is not often do we see a bunch of fragmented indexes. So I mean, there's you could say it's like a kind of a correlation panic attack or a correlation spasm where it's seemingly uncorrelated. Russell's doing its own thing. SPY and Qs are probably the tightest correlation right now. Dow's doing its own thing. That makes for a kind of a tricky market going forward where you could say it's bifurcated, trifurcated, quadfurcated, where all these things are moving on their own islands. I don't think that's really the case. That's certainly not the historical average. Yes, large cap can outperform small cap, but typically there's a catch-up trade, and so I think with one of the most concentrated markets we've had in history. I actually have let me see if I've got an email here on that. I just consumed some content. Here you go. So right here, this is market breadth. It's worse than almost ever. Okay. So your top 10%, or I'm sorry, your top 10 stocks as a percent of the total. So here's an example. Okay. 2024 is the second worst market breadth ever in the history of the stock market. We're talking like back to this shows back into the 90s, and maybe that's as far back as this study goes, which is okay. But the modern day S&P goes back to like 1957. You can go back to 29, 1930 if you want to go back historically, but the modern day S&P is basically about 70 years of price action. Okay. So if you want to see history doesn't repeat itself, but it rhymes, 1957 and now, that's really what you're gathering from, today's S&P. But for the last 30 plus years, we go back to seeing 91 in here. I see 91, that's, 33 years ago. it's bad. So my point is, if the market's up 10%, let's say the S&P is up 10% as a whole. Well, this is saying that 77% of it, so 7.7% of that 10% is because of your top 10. That's how narrow this has been. So it is critically important that this top 10 concentration broadens out into more stocks. Okay. We have an earnings week this week with 502 companies. That is not nothing. And some notables would be Google and Tesla, amongst others. But trades I'm probably taking, probably an Alphabet. So GOOG or GOOGL, probably a Tesla. I'm watching a lot, FCX. I've got some exposure in Cleveland Cliffs. I have some exposure in UPS. I'm curious to see how that always plays out. General Motors and Ford have earnings this week. We have American Airlines, Southwest Airlines, Royal Caribbean Cruises, Sam is Boston Beer. Then some defensives on Friday with 3M and Colgate Palmolive. There's a nice little mix this week. We have Mag 7. We have debt-ridden companies with value plays. We have retail. We have health of the consumer. We have shipping and distribution. We have defensives. So this is a pretty good week to kind of test to see like where these sectors are strong, and where this guidance is looking maybe optimistic or maybe scaling back. I do think if the market's going to keep making all-time highs, we have to see earnings season pick up the slack, and it's going to have to be broad earnings doing pretty well, not just, hey, did Mag 7 do well? Because if Mag 7 do well, everything's fine. It's not the case. Mag 7 doing well makes the market inherently more risky, because you can't keep having these super narrow all-time highs without having the thing just become a house of cards at some point. Okay, so I thought that was interesting. One other one here. Let me pull this over, and then I have a couple more images to show. RSP needs to break highs. Yeah, I thought this was an interesting factoid as well. Most of the time when the market has a strong first half of the year, so our first half was greater than 10% gains in the S&P. Okay, that positive drift momentum carries on a high probability that we'll continue to see higher highs for the year. So that's a good thing, okay, as far as momentum and history rhyming. But what I also thought was interesting is about 56% of years in the S&P, the highs, the peaks are forming in December and in January. Okay, so the fact that we just made an all-time high in July means that there still could be some all-time highs ahead as we get into the end of the year. So those open interest levels, those big gamma squeezes, those levels in December, January that expire, if they're magnets that are attracting the markets, possibly have that stretch up to 5,700, 5,800, maybe 6,000 on the S&P is a big number. Maybe we hit 6,000 and then we fall back a little bit, but there's a peak in December. We'll find out. So I just think for a strong first half of the year, momentum is there. I think pullbacks are necessary. I'd like to see the pullbacks. I said this in that video that I posted on Friday. S&P, okay, 7 to 12% correction territory, and then the Nasdaq. So whether it's NDX or QQQ or NQ, I'm looking at about a 10 to 15% correction. If those levels are hit, I'm interested. Obviously, the deeper they go, the more interested I am in buying, arguably off those lows and see. And it's not necessarily a long-term hold. I would be looking to buy those lows, get back to the highs that we saw in July, just last week or 2 weeks ago, get to those highs and higher, and then look to take some profit. If it's a good position, it's a good position. Okay. All right. So little sum up on some macro content that I consumed this weekend. Russell, keeping a close eye on this for the week. Volatility index, watching this, of course, as well. Wanted to see, actually, I need to look at a center trade here. 55, 55, 50, 55, 60. Hang on one second. So 60. Okay. And that is a 14 delta. $90. So 310. So a little bit more premium collected here. 722, 5560, 90 by 5525. Okay, and I need a 15% take profit from a 310 credit. Is $46. So 260 debit would be a $50 win. See if that plays out today. All right, let's go dollar index. Dollar index at 104.35. The question that's I think on everyone's mind here for Forex trading is, what's the dollar going to do? I look at this support, I look at this resistance. To me, the dollar is still range bound. Okay, I do think a bigger fundamental and technical move is happening on the dollar. It's not ready yet. I'm still not convinced that the dollar has this convincing direction. Okay, so if we break fresh lows in the wake of more rate cuts or more certainty, one thing that could give us a little bit more clarity would be a 731 FOMC. Okay, the probability is not changing, right? You look at the rate cuts and you look at the probability here, there's 95% chance or 99% chance nothing happens in July. 97% chance the Fed does nothing. We're not cutting rates in July. This tool is probably not going to be wrong. This is out to next Wednesday, okay? But will the language of this rate decision give the market the confidence that this rate cut is coming in September? Okay, this is now 93.6%. That's pretty high. It wasn't that long ago. I'm talking literally like within a month, it was around 50%. So this market is way more excited about about the Fed starting to cut rates and starting this cut cycle. Now, is that a good thing for real estate? Is that a good thing for the debt servicing? Is that a good thing for refinancing? All these things are yes in the US. Okay. Now, what the market tends to do is it tends to run with this in a big way, where it's buy the rumor, sell the news. So if the rumor is we're going to cut rates and the language from July says we're going to cut rates and here's why, I think what the market doesn't necessarily want to hear is that every single cut, like, yes, we might be looking to cut. It's not going to be definitive. I can promise you it's probably not going to be definitive or explicit from Jerome Powell on Wednesday, the 31st. But they did say in their last FOMC and some of his press conferences that he's had some sound bites the last couple of weeks that the Fed doesn't have to wait for inflation to get down below 2% to start cutting. Because if we've had a trend from 9% down to 3% and we're stalling at that 3% level, at least the trend is there. And to get down below 2% means that a lot of inflationary things have become deflationary and maybe they let inflation overshoot. So they're trying to have and this is really going back to like that soft landing scenario where inflation kind of perfectly comes down to this like 3%. Maybe a lot of things have gotten into this level where the trend continues lower in inflation, but the Fed is able to take a bit of a premature look and say, look, we can start cutting, but the inflationary pressures will continue down and maybe they can get it right. So is that the perfect ideal scenario? Yes. Is the Fed going to orchestrate that perfectly? I don't know. That's the one thing we haven't seen a lot of is a perfect scenario. Something doesn't break, everything's running smoothly and efficiently. Usually what happens is something breaks and the Fed steps in and backstops it, right? This isn't the case. Not right now. Now, that's the scary part. That's the uncertainty is, will something break for the Fed to then start saying, okay, we're just slashing rates now? Maybe. Does employment have to tick up higher? We'll find out, August 2nd. Are we going to see, more drawdowns in the market? We'll find out, right? So anyway, probability is rate cuts start. Go to this probability chart here. We're looking at a high probability that rates stay the same for July, and then look for a cut happening. That'd be a 25 basis points cut right here. So we're currently sitting at 5.25. That's your July. There's no rate decision in August, but we have Jackson Hole, which would be interesting. It's always a little volatile in a low volume market. The first rate cut likely in September. with about a 94% chance. And then from there, we have another November to December area that the market is looking at another cut. So we could have one cut in September, okay, and then one cut either November or December. Now, it seemed like the market was looking at maybe one cut and then 1 and 1. So the market would see 3 cuts in the next 4 months, starting like September, October, November, December. Having 3 cuts in 4 months would be kind of nice. Which, if that was the case and we have 3 cuts, I mean, that's different than what we started with. We started with 7, we scaled back to 0, we're back to 1 or 2. I mean, it has been like a very chaotic time for the market to see and expect what the Fed's going to do and try to get it right. It has not been easy to navigate. But that being said, it's been a pretty easy market just to see all-time highs for the most part. Now, for individual stock pickers, if you've been in Mag 7, you're doing fine. If you've been in the indexing in the SPY or the Qs, you're doing fine. If you're going after value, if you're going after small caps, you're going after catch-up trades, there's been some dormancy that's probably been driving you crazy. So, for me, some of my big themes in trading this year, I've got indexing. Yes. I have Mag 7. Yes. I also have, quality dividends. Yes. I also have gold and silver. Yes. I have some non-US exposure, mainly China. Yes. And I have some crypto. So it's mainly BTC and Ethereum. So my portfolio, and I do have some energy as well. So commodities. So I have some oil. It's mainly that. I have crude oil futures, USO, and then I traded some gold and silver futures as well. And then I have the Japanese yen. That is a carry slash repricing. And I also have some hedges. Okay, so this is a summary of my portfolio. Have some index exposure, have some Mag 7, playing some earnings, have some dividend plays, gold and silver, of course, non-US with China, Bitcoin, Ethereum. I mean, so look, all of this is not going to go up collectively. If all we do is we see more, index higher, Mag 7 higher, this might be flat, this might be flat, this might be flat, this might be flat, this might be up, okay? This might be down, and this might be down. I mean, there's very few scenarios where I can see all these things going higher, right? And I know that. So what this is for is if the broader market starts to break down, I have hedge, and some non-US exposure, right? Hedge. That helps. Also, there could be a fleet of value, there could be a fleet of safety, there could be a fleet of dividends. Okay, fine. So again, trying to mix it up a little bit where it's not just, all in and it's like, if Nvidia is great, I'm great. If Mag 7's great, I'm great. Look, it was an awesome way to come out of 2022's drawdowns. It was a great way to see the market recover in a big way in 2020, late 2022 into 2023 and carry us to the point that we got, today. And then it kicked off with Mag 7 saved us, AI sustained it. But AI is narrow. AI is going into those large cap techs, and it hasn't been any more obvious than seeing this as last week's performance. This is the best stocks that have carried us for a long time are starting to show signs of pausing. Okay, pullbacks are fine. Pullbacks are needed. You can't have a stock go straight up. But what's crazy is the amount of call option volume and just day to day. Zero DT is a big thing, right? It's responsible for roughly 40 to 50% of the daily option volume is coming in zero DTE. Now, Nvidia, Apple, Microsoft, Google, Amazon, they don't have single day expirations, right? They're weekly. But that shows where that that high activity is it's on those Friday expirations. It's around earnings reports, and it's incredible like how many layers and layers of options and derivatives are around these stocks. And what it does is it creates a very aggressive to make a market, you've got to have covers and hedges. And so it makes, broker dealers have to be very creative with how they're covering these in case there's exposure and assignments, so sometimes that can lead to some actual like illiquid markets. So anyway, Let's get back to the charts. We're good on the dollar index. I'm watching the dollar index closely. I'm still watching the end pairs closely. Oil stabilizing a little bit. I'd like to see oil steady out here in the $77 zone. So if we see oil stabilizing here around 77, that's a good sign. My stop loss is down here on a swing trade. So if we stabilize, that's fine. I'd like to see oil, kind of swing out where we make our move back to the upside. Gold and silver. Gold is down in the day. This is now 4 days in a row that gold is dropping. Part of this too, if you look at some of the sentiment reports, you look at the retail positioning, a lot of retailers are heavy net longs on gold. And typically that's seen as a contrarian signal. So I could see the position, sending gold a little bit lower to test and maybe even scare those retail traders out a little bit. If they get scared out, looking for stability in here and then just have another range trade. Okay, so we've had a nice run on gold. If it stabilizes, cool. Let's see if it just finds support. 2270, 2275. Looks like pretty strong support to me. I'm not short. Okay, I'm just looking to maybe add more to my gold position here around 2280, 2275. Silver, same type of thing. I took some assignment on SLV. I have a break even that's pretty decent right now, but I could repair it pretty easily. My break even on SLV is 2477. So, I mean, if I wanted to, I could just go in and say, look, I'll just sell a 2650 call, get it called away for a couple of bucks and, make some profit. But I still like silver as a little bit of a diversifier and a technical run up towards like $32 to $33, which if I owned it at just under 25 bucks, that profit for me, let's say I'm making, $7 to $8 a share. I'm going to flip that for a pretty nice profit. So if that's the case, that should be per account should be like close to $3,000 per account if I hit that profit target. Now that's doing nothing. If I wanted to lower my cost basis, I can try to, but what I'm trying not to do with covered calls is get it in the way. If I put in a covered call right here and all of a sudden silver blasts the upside, I'm going to basically lock myself into a, $28 or $29 call and get it called away $3 to $4 early. So I think I'm just going to sit on the shares as is and go from there. Okay. All right. So that's gold and silver. Bitcoin. I would be fine with Bitcoin having a, low to high, a little bit of a pullback or pause is fine, but I'm looking to see, do we hit these highs? My chart alarm is set on Bitcoin. Now that we had this little bear trap low, I'm going to set another one here to see if that level gets taken out. So they'll put here bear trap lows and watch that. So chart alarm set above at 73.8, chart alarm set below at 53.6, and just wait and see what's next. I'm hoping that this little trend line break and push is just going to be up, pull back, and then retest highs once again. And that's it. And then Ethereum, there's still some speculation on approved ETFs. I did find one that I traded. It was EETH. I have it right here. So I have a bull put spread below 60 bucks. I did a 60 by 40, collected a decent amount of credit. I went out to the end of the year. So as long as Ethereum is, maybe something like this and stable, we'll see if it stabilizes, great. If the Ethereum ETFs are approved, that hopefully will add some more inflows to this. But there's risk on the trade, and that's why I'm using credit spreads and options. So, but technically speaking, if we have another, from low to high, if we pause a little bit and then the bulls step back in, do we breach 4,000 plus? If we break this, it's not all-time highs. We've been going after 4880 would be all-time highs on Ethereum. So there's more potential measured upside on Ethereum right now than there is on Bitcoin. But, breaking, let's say Bitcoin breaks 74K, then we got to wonder if Bitcoin breaking has enough momentum to reach 100K and make a lot of investors happy. Maybe. And I hope that's the case. If we have a broad market rally, it'd be nice to see that crypto is lifted with it for some risk appetite. Some non-US dollar plays. Okay. Copper continues just to plummet. I'm looking left on copper, and there's still, I don't know. The one thing that's concerning is copper dropping the way that it's been dropping is potentially signaling a global slowdown. And so does copper stabilize here in the middle of this range, or does copper get way, way worse? Obviously, if it's at these lows, I'd still be interested in buying a ton of copper. But I don't know. It's been a really aggressive sell-off. The Nikkei at some recent all-time highs has dropped, similar to the Qs. We're looking at about a 7% correction on the Nikkei. That's decent. That's a pretty big pullback. The DAX German market is up a little bit on the day, but still struggling to make all-time highs. The FTSE super sideways and choppy right now. I'm actually going to look and see on the UK. Okay, so if there's a way to trade like a FTSE ETF, I might look and see if I can trade a FTSE ETF. Maybe it's a Pro Shares, maybe it's something else. But let me go FTSE ETF. Invesco, Franklin. Ugh. I'll just search for it. FTSE ETF. I think I already searched for this. You can trade VGK EZU. So total assets in the Vanguard is VGK at 68. Doesn't look like it's the same pricing. Let me see if I can do an option trade on VGK. I can do options. They are quarterly. Well, I could go out to September. Look at a credit spread if it's favorable. Go out to the end of the year. I don't know. Food for thought. I'll mull it over. Gold shorts to 23.25. There you go. Okay. China. This is the Hang Seng HSI. Other ways to play this. FXI is large cap ETF for China. We're at 26.36. I have some shares of this. I've generated some credits already, but I'm watching. I'm watching very closely. If this is a double bottom, this is essentially my technicals here. If this is a double bottom, I'm looking to see if this is going to offer a pullback and a push that gets us back to these center highs. And then if China, kind of wakes up a little bit, and I don't know. I think the issue is China is not recovering with debt like we are in the U.S. Right? We have a crazy amount of fiscal stimulus with the government, and it's been that way for the last 8 years. Like since 2016, we've added to the deficits, we've added to the debt. 2020 was a bazooka of debt, and here we are. Like the Fed is tightening, the Fed is cutting money supply, but they backstopped Silicon Valley, they backed First Republic when the regional bank crisis happened. So they're out there potentially offering liquidity, but it's not the same as a fiscal stimulus when we've built in all these things and just had money that's still circulating through the financial system. So China has been very dormant, very quiet in this sense, and I still think it's a really good-looking opportunity. The problem that I'm seeing here is that there's a lot of sensitivity around U.S. and China, trade war, tariffs. What happens going into 2025 if Trump's president? What's that look like from a U.S.-China relation standpoint? I don't know. I would say contentious, adversarial would probably be the first words that come to mind. But if we, work out better terms I don't know. Like that's not my job. But from a technical standpoint, if this is a double bottom, I think there's good upside potential to these China plays. How am I starting with this? I'm starting with options. There's some exposure, there's some risk. There's always risk as defined, but I'm watching everything pretty closely. So FXI, JD, this is a retail play. KWeb is a internet play. So, internet ETF, same type of thing. Is this a crown pattern? Do we hit up to symmetry? And then some, basically your Amazon and your Google of China. That's Alibaba, which would be, I think, close to your Google, and Baidu is going to be close to your Amazon. So how's this playing out? Super volatile, but keeping a close eye on it. So there's Baba. Here's Baidu at 91. But watching these charts pretty carefully. I've got some activity on China, but options related. Your Mag 7, we're getting some pullbacks here. Apple's pulled back a little bit. The little CrowdStrike outage last week wreaked some havoc across the globe. CrowdStrike was down like $40-$50 when the news happened. Amazon's had a decent pullback from 201 to 185. I'm hedged on Amazon with a collar trade out to September. Google's offered a pullback. Meta's offered a pullback. Netflix, we're just hanging out. Okay, Microsoft after a pullback. Nvidia, 122. I've got this thing expiring next Friday. This piece of crap. You mean to tell me that Nvidia can do all this and then go nowhere? Come on, man. So maybe that's the case. My position is at 126. So I was looking to see if Nvidia has a bit more of a scare to the downside or comes back to retest highs. This week with earnings could make things a little bit interesting. The average weekly move is around $11.66. So we're looking at a pretty small candle so far. So between, maybe this week, next week, do we have a $10, $11 move that puts us down into the low teens, or maybe pushes us back into the 130s? So, if it doesn't work out to be profitable, it's fine. It's a small risk. But Tesla, stabilizing with Tesla having earnings this week. So I want to get some earnings plays on Tesla. Okay. Let's see here. If I have somebody popping in, yep, I see James coming in. You're going to kick me out? Sandman me?
Yes, unfortunately, I think
good, dude.
we're gonna have to move on, Chris.
Had a feeling.
We got James waiting very patiently right now. So
cool. Well, I didn't know it was just a 45-minute segment, so I'll let you go. Thanks for being here. Thanks for having me. All right.
Yep, appreciate you coming on as always. And guys, we're gonna take one quick break and then we're gonna transition to James. So don't go anywhere. We'll be right back right after this.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey guys, how's everyone doing? Hope you're all having a great start to your week. Had a good weekend. So, interesting weekend. We had the attempted assassination of Trump, and now we've got Biden dropping out. So, politically, a very interesting period of time to be in. However, it doesn't seem to be much of a big deal, to be quite honest. It's not something that I really foresee having much of an impact at the moment. Things may change as we go forwards and as we get more information. But for now, my plan really hasn't changed. So I put out a tweet this morning, basically explaining that I'm bullish on the dollar. I can pull up some info for you guys now. Here. So this is essentially my economics map. I update this every Sunday after I read some reports and things. I'm not sure if you guys can see this due to stream quality and things, but I'll read it out for you. The US rate markets anticipate almost 3 Fed rate cuts this year, but we see risks of a less dovish outlook due to persistent US inflation and a robust economy. This outlook could enhance the USD's rate appeal and help it recover in the second half of 2024. Most G10 European central banks are expected to be more dovish than the Fed, dragging down their currencies. Additionally, risk aversion from the US political and geopolitical risks leading up to the November presidential elections could boost the USD in the coming months. So we have that. We also have quite nice and very typical price action. So if we look on this is the weekly time frame on the dollar, we've got this really nice level of support. And this was kind of ignored. There was a lot of focus on the sort of the 104 level sort of throughout here. And this was a major level of support. And this was probably more major than the one we are seeing a bounce off now. But we saw a lot of traders see this level get broken, this support get broken, and kind of ignore the level right below it. And we are seeing a reaction off here. We've seen, prices respected this level throughout the time. So we can see rejections right here, wicks to the downside with failed closes below, again right here. And we've just had last week's candle closes a really nice hammer off of the support. So just going off, typical price action, what we could expect is a potential push up along with the economics I just read out. It wouldn't be a surprise to me if we did start seeing some dollar bullishness come into the market. Same thing for the euro. We've got exactly the same formation here, just in reverse. Essentially, we've got this really nice level of resistance on the weekly time frame. We've just had this hammer candle come up, test, and reject. So again, just following very typical price action patterns. This could be a sign that we could head to the downside. Now, just referring quickly back to this document here. If we read out the euro's perspective, we've got the euro has regained some ground post-French general elections, but lingering political risk could weaken it into Q4 2024, especially if other fiscally weak eurozone members are affected. The euro USD might drop towards 105 in 6 months, driven by relative policy outlook of the ECB and the Fed. The ECB is expected to remain more dovish than the Fed in the second half of 2024. Global risk aversion due to US political and geopolitical risk could boost the USD's appeal over the euro. The potential return of Trump as US president could exacerbate fears of a global trade war impacting eurozone recovery. So that's quite a nice basis to go in for some euro shorts, which I have done. So you can see I took a short position last night. This was essentially right after markets open. So you can see my sell entry basically was at the tippy top right here. So I saw the markets open. This was, my analysis was written up before we knew Biden was jumping out of the political race. And then when markets did open, we saw quite a relative weaker dollar. We saw, the euro dollar started to rally up on the smaller timeframes here. We saw the RSI became very, very overbought. This price action wasn't typical. And I, as I said, I'm quite a bearish person on the euro dollar at the moment. So I saw, let's just sell it here. And I'll be completely honest, this was luck. I wasn't sat here, in bed trying to catch the top. This was more of a case of, okay, we've got to pull back. I am bearish, so I'm going to enter a short position. And this is quite a large account. So a one lot position isn't too much weight on this account. So the real plan was to see price continue up, and I was going to keep adding positions. And a good example of that is my other account here. This is my one of my main accounts, which I was trying to do a very similar thing as what I just said. So I've been averaging down as price has been rising, and now we're finally seeing some bearish momentum in the euro dollar. And I've got my take profit set down here at sort of the 105 level, as I said, is the target. So these are long-term positions. I'm not looking to close out of these in the near future. This is sort of looking to hold these until sort of the end of the year, and we'll see how this plays out. So yeah, but please don't go and now start shorting the euro dollar. Of course, do your own due diligence. This is just my perspective on things. So other than that, looking at the New Zealand dollar. So the New Zealand the New Zealand dollar is pretty weak. I'm not really much of a fan of the New Zealand. I think the correct term is a double dip recession that it's currently in. So pretty bearish on the New Zealand dollar. And again, as I said, I'm bullish on the US dollar. And this is a really nice, very simple price action sort of play that we're seeing at the moment. So I'm now looking for some sort of retest either on this level here, or the level above it right here, and a continuation to the downside. So I've got alerts set at the bottom of both levels, and I will be executing if we do see a valid pullback. The problem is at the moment, price is just pushing down. We don't have a clear bottom yet. It would be nice to be able to draw some sort of fib level and say, the 50% pullback level is right on this previous low that could be used as resistance. But of course, we don't really have a confirmation that this is the low yet, so it's a bit tricky to draw that fib. Moving onwards, I'm also in a position on the Dow Jones or US 30. So you can see that here. So this is more of a risky play. This isn't something I would take full of my full sort of 2% risk on, because normally I like to see the 50% level here have some sort of previous structure to bounce off, which it doesn't have. So you can see it's kind of in no man's land. The only thing going for this trade really is Edgefinder is very bullish. We have this really nice 50% pullback and a rejection. We have it off the 50 moving average. We also have the RSI down here that's become oversold. So yeah, it makes a lot of sense really to buy from a technical aspect. In the long term, I'm not sure really if this is going to be sustained. To be quite honest, I'm still in favor of my sort of mean reversion idea. And what I mean by that is I think we are heading towards some sort of downside on the stock markets. And when that will be, I don't know. It's not my job to sit here and start trying to call a top of a bullish market, but it's just something I'm very wary of. So, looking really to sort of not catch too much on this, playing it quite conservatively, looking for at best sort of a double top here, just looking for the previous highs. Nothing, not looking to catch anything crazy there. I am still long on the yen pairs. You guys may have heard me talk about that before. I'm actually down quite bad at the moment on the Australian dollar particularly. So you can see here I'm down about £600. I added in, so that's another £100 in drawdown. And there's people out there that will be, cut your losses quickly, approach, risk management, all that sort of stuff. However, the account balance is completely fine. It can handle this. It's not an issue. And the plan here isn't necessarily to go in for a very typical trade. Like I've just shown you the Dow Jones trade and a potential trade on the New Zealand dollar. They are typical trades that I would take. Whereas the yen pairs aren't really the same. I'm not approaching them in the same way. So I'm approaching the yen pairs more of an investment. So, for example, you may have a Roth IRA or an ISA account or whatever you may have, and you'll put money into there every month or every week, however you want to do it. And that's basically the way I'm treating the yen pairs, because if we zoom out away from price action, if you take a price action away from the market and just look at the economics, look at the fundamentals, look at what's really driving the yen, what's really driving the Australian dollar, the pound, the US dollar, you will see that without price action involved, they are clear buys. So that's the way I'm approaching it. I don't really care if we have dips, because that just allows me to buy more. Now with the pound yen, I have had a stop loss here, and it's very, very low risk. And that's because I've got a lot of weight on the Australian yen and the US dollar yen. So you can see here again, we had this dip and I bought in. So yeah. So targets in terms of the yen pairs, I don't have targets for euro yen, pound yen, Australian yen, etc. The only target I have is the US dollar yen. And that's because it's sort of the benchmark. If you ever read about the Bank of Japan or the Ministry of Finance or any sort of institutions talking about yen, they will always talk about the dollar yen as the benchmark. And that's essentially what I'm doing here. So if and when, hopefully when, the US dollar yen reaches the 165 level, that's when I'm done. That's when I'm out of the yen. I'll take profits and I'll reevaluate what needs to happen and what I think will happen. But yeah, until then, I am a bull. I'm happy to keep buying, and that's it. So that's essentially it for all my open positions. I'm just trying to think if there's anything I've missed. I don't think there is, so we'll move on. So we can talk about gold. I'm sure you guys have already heard about gold from the previous guests and from Nick, but gold's always a fun topic to talk about. So it's essentially a rinse and repeat of what we saw last time when we created all-time highs here. We're now seeing exactly the same thing. We've just created new all-time highs. And what happened, when we reached this level here, when we did create these all-time highs, we saw a sell-off. And now it looks like we're seeing the same thing here. We're seeing sort of a profit-taking market now. And although, I am bullish on gold, overall, in sort of the very long term, I think gold still has a lot of potential to go to the upside. I think in the short term, you do need to be very careful that this market may not be driven on the economics at the minute. It's more driven on the larger market participants starting to take profits, looking for a lower price to then potentially get in again at that lower price. Now, I'm not saying that is what's happening, because obviously I don't know that. I'm just saying that that is quite a strong possibility that you do need to be careful of. However, if gold does seem to show some bullish shines, I would be more than happy to get in at this level. You can see it's a really strong level, and this is on the H4. I'm just trying to see if it lines up. It does just about line up with the 50% pullback from the previous swing low right here. We drag the fib high, obviously, to the previous high. This looks like quite a nice level to buy from technically. And as I said, I am still bullish on gold. I'm just very cautious. So this would be a potential first entry. And then, I would really like to see gold come back down to this level of support down here. And that would allow me to get back in and potentially have a take profit back at the previous high or previous all-time high. But yeah, I'm not desperate to get into gold. It's not something that I'm sat here watching constantly. It's more just if I see gold present something, I'll jump in low risk and see what happens. But yeah, more on the cautious side with gold. US 30, I'll wait for it to drop more to buy. Yep, more fair enough. If that's if that's what's written in your plans. Euro dollar. Now, I am already in euro dollar, as I showed you, but I would like to get into a more of a set position. So the positions I'm in are obviously dollar cost average positions, but I would like to get into sort of a set position with a stop loss and a take profit, with maybe a flat 2 to 3% risk. So again, with the targets of sort of the 105 level, and this target is sort of for the end of the year. So you can see the Credit Agricole has this as their target for the Q4. And it's a rough target. They're not expecting necessarily 105 to be the exact target, and then we reverse. So it's not necessarily price drops down, hits exactly, and then comes back up. That's not really how it works. It's more just a guideline for that to be a potential target or the most likely target they see. So that would be something I'm looking for. It's just this sort of daily support that we are seeing at the moment. If we could get a daily candle to close bearish below this level of support and hold, that would be sort of my trigger to then potentially get in with a stop below the previous highs and take it down. So if this is 3.7 and we're trading at a 2% risk, then we could be looking at roughly a 7% gain there. So we'll see about that one. Not too bothered, as I said. I'm already in euro dollar, so if it drops, it drops. I'll make money. Now, NASDAQ is an interesting one. So it's essentially the same thing as I was saying with the Dow. It wouldn't surprise me if we do see a mean reversion. Just looking at how it reacted previously when we're really deviated from this 200 moving average. If we look how price is right now, it looks very, very similar. The RSI looks almost identical. It's not obviously not perfect in terms of being the same, but it's very, very similar. So it's just very risky. Now, in the short term, I'm sure you could potentially make some money in this market, but overall, I would quite like to see a pullback to this level down here. Now, if we look on the daily, that would help price meet this 200 moving average and sort of just stabilize price a little bit. And that would be potentially my trigger to get in long with a stop below this previous wick, something along these lines. And we could see how price moves from here, but not too interested in entering this market right now. I just seen NAS has dropped. Let's see if US 30 is doing okay. Yeah. So we'll see. If you've got any questions, let me know. My watch list is very small this week. Don't really have too much on the agenda. What we can do is have a look at Edge Finder and see if there's anything to note on there. So yeah, as I was saying, Dow is very bullish. So that's US 30, which, as I said, I just showed you I'm long. So that's a nice nice confirmation. Euro CAD is very bullish. Australia, New Zealand bullish. Australian CAD is bullish. USD CAD. So yeah, it seems like CAD is actually more on the short side, which is good because I'm also short on the CAD. Well, actually, that's not necessarily true. I'm not a bear on the CAD. I'm just quite neutral. I'm more sat on the sidelines. So if we read this, we've got the the USD CAD's narrow range trading pattern could be here to stay. Now, this has been repeated in bank reports for, I would say, the last at least 2 to 3 months. And that's why, I don't really touch the dollar CAD, especially at the moment. It is, if you check the charts, it's very, very ranging. It's a very ugly pair to trade at the moment. Although risks have shifted for the pair to be increasingly pressured higher, as June's Bank of Canada rate cut has officially set off the policy divergence with the Fed, record buildup of CAD shorts could still prevent excessive spot slippage for the CAD. So that's something interesting to note. So that's what I mean. It sounds bullish initially, and then it sounds bearish to the second half. So it's not something I'm too interested in trading at the moment. Thanks, James, for the analysis. No problem at all. I think gold falls today and tomorrow and then starts to go up. Let's see where gold stops to start buying. The DXY recession will bring it down, so it doesn't rise much later. Potentially, yeah, we'll see. DXY bull or bear. Bossy, we have covered the DXY, so feel free to rewind it. But essentially, I'm looking into dollar long positions, which actually helps my pound dollar short idea. So, not sure if any of you guys have been watching me too closely, but I've been planning a short position on the pound dollar for almost the past month. Now, I'm not in this position. I would like to see a slightly higher price. However, I quite like the way price is moving right now. So if we look, we've had a weekly bearish close. The dollar's quite strong. The only problem is that I could see some further sterling bullishness to come. But yeah, I'm just not too set on shorting this right now. I may put a starter position on. And you can see the long-term target for this is the 1.23 level. And that should be sort of into 2025. So I'm not looking to take this trade and immediately hit take profit. This is the weekly time frame. So if you do want to start looking at this trade, just keep in mind it's a position trade. It's not a day trade or a swing trade. It's something you will be required to sort of sit in for a while, and you may have weeks and weeks of drawdown. You never know. Do you think the USD will be bullish for a long time? Define a long time. It depends. If you're a scalper, a long time could be a week. But for me, a long time is sort of the next couple of months. And I think the dollar could be bullish at least until this 105.4 level, and then possibly a reconsideration there. This could be, a continuation to the downside. We do have this high here, created a sort of equal low around here, but then this here is quite important. This is a lower high from the previous one, and this is kind of a lower low if we compare it to the move here. So again, if we are just looking at price action, this could be just a lower high getting formed. However, I am a more of an economics trader, so I am bullish on the dollar overall for the next couple of months. I mean, we'll have to see how the elections go. We'll have to see who is elected and how that goes down. But yeah, we'll see. USD Swiss, we can see USD Swiss actually looks like a really nice long position for me. So if we take a look here, so as I said, bullish on the dollar. Now if we pull up the Edge Finder again, and this may have changed, but last time I checked, the Swiss was being sold quite heavily. Yeah, so you can see it's 89.66% short on the Swiss. Dollar is looking quite favorable. So the dollar Swiss looks really, really nice. The problem is I've kind of missed my entry. It would have been really nice to get in sort of around here. this level would have been great. Unfortunately, I missed it. As I said, we could maybe going for a long-term trade, but I'm not too happy with that. I do quite like the Swiss in general. I think it's a very stable currency, so it's not something I'm super bearish on. I never really will be super bearish on the Swiss, obviously unless something drastic happens. But generally speaking, I'm not a super bear on the Swiss. So I would like to go long, potentially off another test of the support would be great. And I'd be looking for something quite simple and quite short term, just up to this previous high around here. And that would be sort of perfect for me. But yeah, we'll see. So I think DXY is going to get a bullish injection. However, I'm not sure because DXY going to go down hard with Trump, I think, my point of view. Interesting. But yeah, so that's about it, to be honest. I've covered everything that I have to cover at the moment. Let me just take another look at the Edge Finder. So yeah, as I said, we've got Dow bullish, we've got gold and Nasdaq bullish. Russell is bullish. Actually, let's have a look at the Russell. Now, I don't trade the Russell. It's never something that I have traded, to be honest. However, I know I was looking at it with Nick on one of the previous streams, and it did look quite nice for a pullback. So I'm just going to see if there is anything valid yet. It doesn't look like there is, to be quite honest, but that may change. So yeah, I'd like to see a bit of a further move to the downside to test this 50% pullback. That would also then use this previous high over here as a level of support. And this would be a very simple sort of break and retest pattern. And I love break and retests. I think they're one of the most simple and high probability trading setups there is, to be quite honest. So yeah, I think this looks really nice technically, but as I said, I don't really trade the Russell, so I'm not too clued into what's really driving it at the moment, what's behind this market. So I'd have to do some research before actually trading it. But yeah, technically looks great. So let me just check something really quick. Okay, so it seems like I'm the last guest. Let's just see cut data one more time. So we can see gold is still being heavily bought. Let's actually focus on gold for a second. So gold is 84.37% long. We do see a net change of just under 2%. They are primarily long with a slight decrease. So in general, that is still quite good for gold's potential upside. But as I was saying, that does potentially reinforce the idea of profit taking. If they are reducing positions, it could be that they are taking profits at the all-time highs. So it'll be interesting to see. I think COT data updates is it every Tuesday? I think it updates every Tuesday. So it'll be interesting to see if it updates tomorrow and what the results are. Cool. Okay, guys. So I think I'm going to call it a day here. I'll give you guys another 10, 15 seconds if you've got any final questions. But if not, then I will see you hopefully later this week. But if not, then I'll be back soon, I'm sure. But yeah, I think that's everything covered. We covered gold, covered some indices, some currencies, so all good. Cool. Okay, I hope you guys have a profitable week. Like I said, I hopefully see you very soon. Yeah, enjoy the rest of your days.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.